Hi and good morning, and welcome to the first installment of the First Citizens Asset Management Limited 6-Step to Financial Freedom program. I am Nadira Sipasad, the Senior Marketing Officer at First Citizens Asset Management Limited, and I will be your facilitator for the next 6 webinars. The aim of this 6-session program is to build investor confidence through a series of financial literacy webinars which shall encompass both savings as well as investments. The program is not designed to sell the products of First Citizens, but created rather to educate and inform the public of the need to take control of their own finances. First Citizens Asset Management Limited started its financial literacy drive in 2005 through hosting a series of seminars throughout Trinidad and Tobago, and the program has grown to now include personal meetings with corporations and now the newest edition, financial webinars. In discussing Step 1 to Financial Freedom, today's webinar takes you back to the basics in understanding both savings and investments, as well as the need for both. The sentiment I would like to leave behind at the end of today's webinar is that you do not have to be a broker to understand finances. Today's webinar will be 30 minutes in length with 20 minutes presentation time and 10 minutes to answer any questions submitted. To submit questions, I ask that you please type it into the question window in your control panel. This can be seen to the right of the viewing window. If you do not see your control panel, click on the red arrow to expand it. Questions will all be addressed at the end of the session. Throughout the presentation, there will be 2 polls conducted. Please keep your viewing panel open after selecting your poll choice. All attendees will be muted throughout the webinar in order to ensure clear delivery and minimal interruptions. This webinar is for informational purposes only. The investments mentioned may not be suitable for all investors. Please be advised that all investments do involve some degree of risk. When making any decision, you need to take your own financial situation and risk tolerance into consideration. Before making any investment, you are advised to read the prospectus. At the end of today's webinar, you will be able to tell the difference between savings and investments and the need for both. You will be able to separate your savings needs from your investment needs, as well as identify a product geared towards savings versus a product geared towards investments. So the first basic question to be answered: what are savings? I am sure that most individuals, even if I ask those in the financial arena to give me a definition, they will give a definition that intertwines some aspects of investments. However, in the simplest way put, savings simply refers to that part of your income that is not spent on consumption. So yes, it is accurate to say that funds left in your bank account after you've paid all your bills, purchased all your consumables, are actually your savings. So then, if that is savings, what is a savings account? A savings account is a deposit account at a bank earning interest where withdrawals cannot be done via checks. At this time, I would like to stress that the interest rates on savings accounts in commercial banks are relatively low as they carry very little risk. Most of us hold savings accounts for the purpose of transactionary purposes. We have these accounts that our salary passes through, and it allows us to meet our expenses through the use of a debit card. So now that we understand that savings is simply a part of your income that was not spent on consumption, we approach the question, what are investments? An investment refers to the purchase of a financial product or an item of value with the expectation of favorable returns. Simply put, an investment is using your money in order to make you more money. And I would like to stress that I said a financial product or an item of value. So an investment does not have to be a financial product only. For example, someone who purchased property with the intent to sell it at a later date in hope of making a profit has made an investment. This illustrates another basic fact, in fact, two basic facts on investments. The fact that it does not have to be a financial product, because this example is a real estate investment. And the second fact, one very important fact, is that returns on an investment are only realized at the point where the investment product or item of value is sold or cashed in. Using that same example, if that house was purchased at a price of $1 million and it appreciated to $2 million within a year's time, but after 2 years you decided to sell it for $1.5 million based on the value at that time and the economic climate, the profit or the returns on that investment would only be $500,000. So despite the fact that within time period you held on to that property, it went from $1 million to $2 million. At the time when you decided to sell that investment, the value was only 1.5. So your returns is only that 500,000. So there, it's an important fact to remember when investing in mutual funds with fluctuating unit prices that your investment may seem to be growing as you hold on to your units, but the returns you experience are only determined at the point where you choose to cash in on your investment. So when you're making these investments, for example, the Altacouch Fund, the Immortal Income and Growth Fund, the RBC Royal Bank fixed income funds now have fluctuating unit prices. The unit trust first scheme has a fluctuating unit price. What you need to take into consideration is the unit price at which you subscribe to, as well as the unit price at which you choose to redeem, because those are the unit prices that actually determine your profit or loss, your real returns on your investment. So now that we've covered the basic definitions of what are savings and what are investments, the first poll for today, the question I'm throwing out to you guys is this: do you think that there are no risks attached to deposit products? Those are savings and checking accounts as well as certificates of deposits. Please select yes or no, and the results will be shared with you at the end of this presentation. So now we go back to the basics again. Why save? Why? We're always hearing about it. We've always been told that it's wise to put a little money aside. But why do we need to save? In this page, you would see that I've only mentioned 3 reasons, but there are actually many reasons. But the 3 main reasons: you save as a measure of precaution, you save to accumulate capital, and you also save in order to meet your short-term needs. So the first thing I'm going to touch on is the first piece of advice that I give to my clients. Ensure that you have a precautionary savings, or as it's commonly called, an emergency fund. Sometimes we find it difficult to put aside as much as a recommended 3 to 6 months living expenses, but I always advise that at the beginning of each month, a portion of your salary should be set aside for any unexpected emergency that may arise, such as a doctor's visit or car repairs. For example, if you do not get into the habit of putting aside a few $100s at the start of every month for these emergencies, when they do arise, you now have to ask, where can I get the funds? Do I need to break an investment to get the funds? Do I need to withdraw from my funds for retirement in order to meet these expenses? So your precautionary savings should take priority at the start of the month. You put it aside every month. Currently, we all hold a savings account. I'm sure at least 95% of us hold a savings account. As I said, it's normally there to facilitate your salary going into an account. And with the use of a debit card, it allows you to meet your expenses, pay your bills, go to the movies, have a nice dinner here and there. But we need to get into the habit of, separate from our transactionary savings, we ought to have precautionary savings. If you start practicing this habit, you will find that you've actually established an emergency fund, and it will eventually grow to the recommended amount, because you are not going to encounter emergencies every single month. So if it is you put aside $500 this month or even less, you put aside what it is you can afford to put aside for these emergencies, and you do not use it, and the next month you do the same thing, not every month you're going to be using from it, and so you find that you're actually building your own emergency fund, and eventually it will get to the recommended 3 to 6 months living expenses. So the second point I said is that savings accounts are ideal for accumulating capital. Before getting into any serious investment regime, it is advisable to use regular deposit accounts to accumulate capital in order to avoid loss of capital during the accumulation phase. There are many types of investments that require a fairly large initial investment, and as such you may have to use savings accounts, certificates of deposits and such to build the capital prior to investment. For example, if you're a customer that's interested in the bond fund with First Citizens Asset Management, the Altitude Fund, you need to start with $10,000. If it is you don't have that, we may put you on a plan to start accumulating the capital towards that sort of investment. So this is why I say getting into a proper savings habit helps you. It helps you accumulate capital. Savings may also be more appropriate than investment funds in some instances for meeting short-term needs. For example, if you wish to save weekly to purchase a new laptop as soon as you have acquired enough, it may be more convenient to build the savings in a regular deposit account where there are limited risks attached, so that you are sure that your capital is there when needed, and also that you have very easy access to your funds when you need to make that purchase. You do not want to be saving for a short-term need such as the purchase of that laptop, and you know that you have deposited say $7,000 over the period of time, say the 4 or 5 weeks, and then when it's time to make that purchase, you find out that your $7,000 is actually only worth $6,500 because the investment did not perform. So for these short-term needs, you may actually prefer to put it in a savings account where you know that at least your capital is being preserved, so that when you're ready to meet this short-term need and make the purchase, your capital is still there in the account. So now we've covered some of the reasons for savings, and yes, there are more, and we will cover some of this in later sessions of our webinars. But now that we've covered the basic reasons for savings, I ask you, why invest? There are so many reasons as to why persons invest, but if you recall, I said that investments refer to using your own money to make you money. So the first reason I'd like you to take note of is to hedge against inflation. In the past 2 years in Trinidad and Tobago, we have seen inflation become a teenager, and it has remained a teenager for a long period of time over the past 2 years. Fortunately, this is not the case anymore. We're actually fortunate to be experiencing very low inflation rates right now. However, the cost of living in Trinidad and Tobago has increased steadily and at a higher rate than most investments are paying in the last couple of years. In other words, the real returns on your investments have been negative. Real returns will take inflation into consideration as well as taxes. Currently, if you are a resident of Trinidad and Tobago, you do not pay withholding tax on your investments in commercial banks. So we're looking at inflation. Your returns would have been negative if you took inflation into consideration. In making medium to long-term investment decisions, namely retirement, which is one of our biggest investment decisions, it is important to take inflation into consideration, as you need to accumulate enough funds to satisfy your long-term goals. Think about the cost of bread 10 years ago or even 20 years ago as opposed to the price now. Now think about that rate of inflation and think about what it can be when you plan to retire. putting all your retirement funds into a regular deposit account or a few regular deposit accounts will not be able to meet or beat inflation in order to provide you with a comfortable lifestyle that you want at retirement. At retirement, we want to have a lifestyle that is similar to the lifestyle we have now or even better. So to put the right things in place, when planning for retirement, you need to open your investment horizon and you need to take a little risk, which means you now need to move away from savings products and deposit products to investment products. Having greater returns on your investments as opposed to a regular savings account now gives you access to more income, which can lead to a better lifestyle, whether it is now or in the future. If you have investment products that pay you monthly interest, quarterly dividends, semi-annual dividends, and so on, whether it be bonds, whether it be mutual funds, whether it be equities, you now have access to increased income. You can decide to reinvest this income and benefit from compounding returns, or you can actually use this income as supplemental income to your current salary to help boost your current lifestyle. So if it is your salary is $8,000 and from your investments you can earn an additional $500–600 every month, you now have this additional income that can help you have an improved lifestyle. Maybe if you leave it over a period of time and after a year you say, now I'm going to access my income and maybe use it for a small vacation, you see how it is investments can benefit you, because whereas if all your funds were sitting in a savings account, and with the current rates of interest in Trinidad and Tobago, the interest rates are very low, you'd have actually earned a lot less, and you would not have been able to benefit from having this supplemental income. So having the right investment portfolio for all your medium to long-term plans, such as your kids' college funds, retirement, purchase of homes, purchase of second homes, etc., it gives you a sense of security and removes the financial burden faced by those who didn't put the right plans in place. Someone who has started investments for their kids' education, for their retirement, and so on, will sleep better at night than someone who has no plans. You don't want to wait until the kid is 15 years old, say, yes, she has some potential, now I need to put plans in place. No, if you started from their younger age and you put the right investment plans in place that will help with inflation and so on, at the time when they're ready to start their university, you have accumulated enough funds. I would like to stress that you don't need to be a millionaire to have all the right financial plans in place. One of the common things that we see in Trinidad is a lot of people think, I don't earn enough money to do investments. I don't earn enough money to put these things in place. They always say, I don't have enough money at the end of the month to do this, Ms. Prasad. How it is you can help me, because I can't put this aside although you're recommending it. You simply need to start using your own resources to the best of your ability, and starting small can actually lead to improved lifestyle and greater financial security. Yes, we have clients who may not be able to put aside the $200 that we recommend or the $100 that we recommend, but sometimes if I break it down and I tell you, okay, you think it sounds like a lot if I ask you for $200 a month. How about you just put $50 a week? You wouldn't feel it as much, and you'll see that you're doing the same thing that you were first advised to do. So this is one of the things you need to do, and then you have a greater sense of security knowing that, hey, at the end of every week I'm putting aside $50, so when my child is 18, they would have opportunities I did not have. Or you're putting aside $50 saying, I can retire at age 55 and know that I have the right things in place to live comfortably. Back to the basics again. How do you differentiate a savings need from an investment need? There are many factors to consider, but the three most basic I have found in discussions with my clients are the timeline, the risks attached, as well as the required returns on the investment. You need to consider when you need to access your funds before making any financial decision. Using a product with medium to long-term growth makes little financial sense as using a short-term product to meet long-term goals. For example, using a bond fund to accumulate capital for a vehicle purchase in a matter of months does not make sense, as you do not want to risk the capital that you're saving for the purchase of your vehicle. And also, when you're ready to make that purchase, you may now face penalty charges for early redemption, as this is a medium to long-term investment. Consequently, using a certificate of deposit would not be appropriate for accumulating capital towards saving for a child's education or even retirement, because this will not be able to hedge against inflation over that longer period of time, and so you will not be able to meet the cost of living at retirement with what you have saved. So in making decisions, you also need to consider your own risk tolerance. I would personally like to stress that even if you are risk adverse, it is necessary to expand your investment horizon to include investments in equity and bonds to meet your long-term goals, especially retirement. I know that I'm stressing on retirement a lot, but this is such an important aspect of financial planning and towards having financial freedom that later on there'll be an entire webinar stressing the importance of retirement planning. So again, as I said, you need to consider your own risk. Ask yourself, how well do you sleep at night? If it is you know you're the kind of person, if it is you hear that your $100,000 within a month's time became $90,000, and that suddenly gives you hypertension or cardio, you realize you're not the type to take risk. So maybe you need to look for lower risk investments where there's at least some preservation of your capital. So you need to ask yourself, what risk level are you comfortable with? But even if it is you're not comfortable with any risk at all, when it is you're planning towards your long-term goals, if it is you really want to meet your long-term goals, you're going to have to take at least some degree of risk. Required return. I have many clients who come in and tell me how much it is they need to accumulate in what period of time. So if it is you come in and you tell me you need to have $20,000 within a 2-year period towards the purchase of a vehicle or the purchase of or $100,000 in 2 years for the purchase of a home, then it is I know from based on how much you can contribute and what it is you need to get, the required return I'd be looking at. And only then would I be able to give you advice on what sort of portfolio you should build. So it's very important that when you go into financial institutions and you need to know and have a plan as to what your money is going to do for you. Only when you tell your financial advisor that would they be able to best advise you on what investment product you need. So knowing the required return will also be able to tell me, do I need to give you a savings account? Do I need to give you an investment account? So basically, again, I'm stressing the point that you now need to take control of your own finances. Most of us know that it is a fact that if you go into a financial institution and ask for a product, you simply hear product features, that is the rate of return, the amount of money you have to start with, the amount that you can deposit thereafter. You need to ask the questions. You need to take control. You need to tell that person, I'm going to need access to my funds at this time. The purpose of these funds are for... It is all up to you now, and only then will we be able to advise you what is best for you. And now for our second poll. Do you believe that the maximum deposit insurance corporation coverage you can enjoy from any one financial institution is $75,000? Please send yes or no, and please leave your viewing panel open as we continue. Again, please send yes or no. Deposit products. What are the deposit products available in the commercial banks within Trinidad and Tobago? We have regular savings accounts. There are many savings accounts in First Citizens as well as the other commercial banks that go by many different names, but they're all savings accounts. You would hear the Classic Reward, you'd hear the Evergreen account. There are checking accounts such as the Evergreen account, the Moneymaker accounts. All of these are deposit products, and again, we also offer certificates of deposits as well as call deposits. These rates are relatively low as compared to the investment products because the risks attached to deposit products are very limited as opposed to the risks attached to investment products. Investment products. The mutual funds available at First Citizens are through the First Citizens Asset Management Limited, and these are, we have fixed income funds, we have short-term as well as medium to long-term fixed income funds, we have an income and growth fund, and we also offer another product which is a non-mutual fund, and this is the retirement provider, which is a deferred annuity product. At the end of each of our webinars, we will be featuring a product that is offered by First Citizens or First Citizens Asset Management Limited. The product that I am featuring today is the Abercrombie Monthly Fixed Income Fund. The Abercrombie Monthly Fixed Income Fund is being featured as it is ideal for both savings and it is also ideal for some investments. It's a short-term investment product. The interest is calculated daily and credited monthly. I cannot stress on how much this can benefit you. Let me give you an example. Again, I've been working with a salary of $8,000. So if it is you get a salary of $8,000 and you use this salary throughout the month. If it is you put your salary into an Abercrombie account, you put your $8,000. 2 days later you say, okay, I need to get $2,000 out. So for that 2 days you got interest on your $8,000. You took out the $2,000 to go to the groceries and such. After a week's period, you decided you need access to more. You say, okay, I'll take another $2,000 and put it into my savings account because I need to pay some bills. For that 1 week, that $6,000 would have been getting interest daily. So you can benefit so much from a product that gives you interest calculated daily. You can rest a lump sum of money. When you get bonuses, commissions, back pays, all of these things, you can put it into a fund like this. It's a parking spot. These short-term funds are very good parking spots. You park your money in there. You get interest daily, credited monthly until you're ready to use it. So in this way, you are actually taking control of your finances and making smarter decisions. Because you're now allowing your money, even if it works for you just for a few days while you put it there, you are allowing your money to make you more money. So that is one of the great benefits of the Abercrombie Monthly Fixed Income Fund. You have very easy access to your funds. You have access of up to $100,000. This is a TT dollar fund, $100,000 a day at any one of our First Citizens branches. So you may have opened your account in San Fernando, but you can make your withdrawal at Independence Square, Scarborough, Roxborough, Point Fortin, anywhere, any one of our branches. Also, the Abercrombie Monthly Fixed Income Fund is a low-risk investment fund. This product is ideal for that precautionary savings that we spoke about, because you know that it's a low-risk investment fund, so you're still getting returns. It's 2.15%, and in today's current economic climate, 2.15% on a low-risk investment fund is a hell of a deal. So you can actually benefit from that while saving towards your emergency fund, because you have easy access to it, low risk investment, plus you're getting a great return of 2.15%. So this product is ideal for building your emergency savings. It is ideal for saving towards some of your short-term needs. This product works well for a savings plan, and it also works well for your short-term investment needs. So that is the product that we had featured for today, the Abercrombie Monthly Fixed Income Fund. At this point, I would just like to mention that our upcoming webinar is August 10th, 2011 at 2 p.m. It will be Step 2 to Financial Freedom, Understanding and Managing Risk. Before we go to the polls and the question and answer session, I'd just like to say if your questions do not get answered, you can send it with any feedback or comments to investments@firstcitizenstt.com. And now that brings us to the end of the presentation. I'll now go to the poll results and share it with you, and then I would welcome your questions and I'll answer it to the best of my ability. And now, guys, my second poll for today. Do you believe that the maximum DIC coverage you can enjoy from any one financial institution is $75,000? I will ask you to please send yes or no at this time. Again, do you believe that the maximum DIC, that is Depositors Insurance Corporation coverage, you can enjoy from any one financial institution is $75,000? Again, the results of the polls will be shared with you at the end of the presentation. And I ask you, after selecting your poll choice, to please keep your viewing panel open. Okay, that was a very simple question, so moving on. Deposit products that are available in Trinidad and Tobago through commercial banks. You have your regular savings account, your regular checking accounts, and your regular certificates of deposits. These three different types of accounts facilitate different types of needs. Most of us have a savings account to facilitate our salary. This is a transactionary account. This is the account through which our income passes and through which we meet our expenses. To most of our savings accounts, we will have a debit card attached to it, which helps us in facilitating our consumption. You go to the groceries, you make your bill payments, you go out for drinks, you go for dinner with the family. You use this account as a transactionary account. Checking account facilitates other sorts of expenses, and it also gives those the opportunity to make withdrawals using checks. For example, this is appropriate for those who have small businesses. It's also appropriate for those who wish to have an extended credit facility known as an overdraft attached to it, where you're able to overdraw on your account. Certificates of deposits. These are available from 1 month, 3 months, 6 months, a year, even up to 3 years within commercial banks. And these normally give a higher rate of return on your regular savings or checking account because you are asked to not withdraw from your certificate of deposits for a certain period of time. So these are the deposit products available at the commercial banks within Trinidad and Tobago. Investment products. The mutual funds available at First Citizens Asset Management Limited. We have fixed income funds. We have both short as well as long-term fixed income funds. We also have an income and growth fund. We also offer another product, a non-mutual fund known as the retirement provider, which is a deferred annuity product. At the end of each of our webinar sessions, we will be discussing one of the products available at First Citizens Asset Management. Today's product is the Abercrombie Monthly Fixed Income Fund. The reason why I chose this product for today's webinar is because this is an investment product that is actually able to meet your short-term needs, which are your saving needs, and it's also able to meet some of your investment needs. It's able to assist you with accumulating of capital. It is highly appropriate for using as an emergency fund, and it's also highly appropriate for having your precautionary savings. Yes, I know you do not have a debit card attached to this fund, as it's a mutual fund and not a regular banking account. However, you do have access at any First Citizens branch, and you can withdraw up to $100,000 within a day's time. It is a short-term investment product. The interest is calculated daily and credited monthly. I would like to stress a bit on the advantages of having your interest calculated daily and credited monthly. If you get your salary paid into your savings account, let's say a salary of $8,000, and you move your salary from your regular savings account to your Abercrombie, which pays 2.15%. Regular savings account, you may be fortunate if you're getting 0.5, 0.6, 0.7%. So you move part of your salary over to this account. As you need to use from that salary, you move it back to your savings account. So if it is, you know, you need $3,000 to pay bills, $1,000 for small expenses, and you don't use it all in one day. For the days that you leave the money within the Abercrombie fund, you gain interest. So if your entire salary of $8,000 sits in your Abercrombie for 2 days, for 2 days you get that daily calculated interest on that $8,000. And as you use from it, the interest is calculated daily on the ending balance. And you'll find that if you start this habit, you would start a savings pattern, because if all of your salary stayed within that savings account, you would find that you use more. But because now your salary is resting in a mutual fund where you have to move it from the mutual fund to the savings account in order to carry out transactions, you would find that you leave some in the Abercrombie Mutual Fund. So interest is calculated daily and credited monthly. This is also a great advantage if you ever get lump sums. If it is you get commissions in your job, or you get lump sums at certain times of the year, and you put it in the account just for a week or 2 weeks, because of that calculated daily, you gain from this. And it's credited monthly, which means that you get compounding monthly interest. So the interest at the end of 1 month is added to the principal amount, and then interest from the first day of the next month is now calculated on that new balance. So this is another great advantage of this short-term monthly fixed income fund. Very easy access. As I said earlier, you have access at any one of our First Citizens branches. You can view your balances online. You can view the transactions online as well. And it is a low-risk investment fund. The unit price is $20 TT. It does not fluctuate. In that way, you have a sense of security knowing that the amount that you subscribed at, because when you're subscribing into the fund, the unit price is $20. When you come to redeem, it is still that amount. So you can be assured that that has not changed. So that is the product that we are featuring today, because the topic for today was savings and investments, understanding both, the differences between both, the need for both, identifying which is a savings need, which is an investment need in your life, and finally being able to attach a product. So now that we've discussed all of that, the product that we featured is one that is suitable both for savings as well as investments. Now I will be checking to see if we have any questions, and I'll also be sharing the poll results with you. The first question I posed to you would have been, do you think that there are no risks attached to deposits? 38% of you all said yes. 63% said no. At this time, I would like to say that yes, it is limited in the amount of risks that there are attached to your regular deposit accounts, but there are risks attached. We will be discussing the risks attached to both deposit accounts as well as investment products in Step 2 to Financial Freedom, Understanding and Managing Risk, which is on August 10th. The second poll that I threw out to you, do you believe that the maximum DIC coverage you can enjoy from any one financial institution is $75,000? 66% of you said yes. 34% of you said no. 34% of you were correct. You are actually able to maximize up to $225,000 in DIC coverage with any financial institution that is actually registered with the DIC. So those are the results of the two polls. And now for any questions that you all had. I am seeing that the questions, a lot of the questions that came in today actually refers to, I'm seeing, what are the current rates of returns on our regular savings account? It depends on the type of savings product that you have, because as I mentioned, we have savings account, checking accounts, and certificates of deposits. And these three types of deposit accounts all carry a different range of rates of returns. The savings account rates are very low, and it depends on the saving account that you have. I know I can only speak for First Citizens, but within First Citizens we have Classic Rewards, we have Moneymaker, we have Neo for the kids, and so on, and all of these carry different rates of return. So it really depends on which product you have, but right now rates of returns on regular deposit products are very low. That's why I say sometimes with your salaried account, your savings account, you may be getting 0.5%, And if it is you have a preferred savings account, you may be getting 0.65, 0.7%. I can tell you that even with these certificates of deposits, the rates are very low right now. You can go up to the maximum 3 years with the amount of $1 million, and the most that you would get is 1.25%. And what I'd also like to mention with the certificates of deposit is that if you choose to take your interest payments monthly or quarterly or semi-annually as opposed to annually, you receive a lower rate of interest as well. I'm seeing what are some of the examples of long-term investments regarding retirement funds. For retirement funds, I normally tell persons they think that having a deferred annuity means that they have a retirement plan. But a retirement plan is really a portfolio of products that you should have, and it depends on the age or how close you are to retirement, what your portfolio can look like. For example, someone aged 25 versus someone aged 50, if both are planning to retire at age 60, would have a retirement portfolio that is very different in composition. Someone at age 25 now building a retirement portfolio can afford to take a higher degree of risk and expand their horizon to include equities, bonds, or even mutual funds that allow for investment in equities and bonds, namely income and growth funds, which are ideal for a part of a retirement portfolio. Deferred annuities are also ideal, but a deferred annuity should not stand alone as your entire plans for retirement, or even your pension plan within your company should not be the only plan that you have for retirement, because we will discuss in later webinars the advantages and disadvantages of the different pension plans within companies. But the income and growth funds are one of the types of products for medium to long-term planning, namely retirement planning, because it gives you a greater hedge against inflation, because it opens up the risk portfolio. Whereas if it is you had certificates of deposits, or if it is you had just had your deferred annuity, your level of risk would be relatively low, meaning risk-reward relationship. Your returns, yes, it may sound fantastic, 4-5%, but what if I told you on average income and growth funds over the longer period of time could have given you 7-8% if you averaged it over that time? So that is one of the products you can look to. Bond funds as well. In the periods when interest rates are low in the economy, bond funds as well can be an ideal part of your retirement portfolio. But again, it depends on your age. So if it is you go into a financial institution, a commercial bank, an asset management company, an investment company, they would have to look at how close you are to retirement before deciding what products to give you for your retirement portfolio. I am seeing another question. Besides the Abercrombie Fund, what other short-term products do you have? Other than the Abercrombie Fund, we also have the PARIA Monthly Fixed Income Fund, which basically is a U.S. product that is similar to the Abercrombie Fund. It is similar in the fact that it's a low-risk investment fund. It's a monthly fixed investment fund where you receive your interest monthly. The interest is also calculated daily and credited monthly, and the PARIA Fund is suitable for those who intend to travel or have the need for U.S. cash, because it allows you to save in U.S. cash and it allows you to withdraw in U.S. or also to withdraw in TT. So that is the only other short-term mutual fund at First Citizens. I'm not saying that there are many, many more available on the financial market within Trinidad and Tobago, but those are the only two short-term investment products that we have at asset management, at the asset management company. Why is it not, I'm seeing also, why is it not possible to make withdrawals from the Abercrombie accounts online? The Abercrombie Fund is a mutual fund which is governed by a trust deed. The trust deed for the fund clearly states that redemptions must be made by someone signing a redemption form. Unfortunately, we have not made any plans to change that. So in order to have redemptions made from the Abercrombie Fund, it must be done at a branch where you can sign a redemption form. I'm seeing, are fixed deposits good for retirement funds. As you get closer to retirement, certificates of deposits are highly advisable to hold within your retirement portfolio, because within the 5 years prior to retirement, you'd want to shift your investment products more to lower risk products. You don't want to accumulate $1 million 5 years before retirement, and when you retire you find out that it's only worth $800,000. So prior to retirement you start shifting your portfolio to lower risk investment products as well as regular deposit products, because you know you now have a greater sense of security knowing that when you retire your funds are going to be there, and it gives you easy access to the funds at retirement. So yes, certificates of deposits are appropriate for retirement portfolios, but I would more advise you to use it when you're closer to retirement. Certificates of deposits are ideal for having, especially if you have short-term certificates of deposits as part of your emergency portfolio or your short-term needs. For example, if it is, you're saving towards the purchase of a home in 2 years, or you plan to travel within a year or two and you're not fully comfortable with the mutual fund and the risks attached, you then use a certificate of deposit. Okay, those are all the questions I am seeing at this. Oh wait, I'm seeing another one. Would you recommend using savings from pensions for someone who decided to go back to school for post-grad studies? Well, at this point I would say it depends on how long you've been invested in your pension plan and how much you've accumulated and what is the company policy. If it's a company pension plan you're referring to, that is. So that is not something I can say offhand without getting greater details about it, because there may be other things we can consider to fund the studying. Okay. Some of you at this point may be experiencing difficulty in viewing the slides. This is due to some technical difficulties. However, we will have the entire presentation available on the First Citizens website at a later date. For all of you who have joined in, we have your email addresses. We will email you a link where you'll be able to view the full presentation. Our website again, www.firstcitizenstt.com, where you can also find information on all of the products available at First Citizens. Let me see if there are any more questions. Should you open an investment account or savings account for a 3-year-old? For a 3-year, you would not be able to put a 3-year-old on a mutual fund product. You must be 18 years or over to be a holder on an investment product. However, if it is you would like to have that in place for the 3-year-old, you can't put a 3-year-old as a beneficiary either. You would have to leave it in your will, in your own will, how you would like the funds used for that 3-year-old. But it's on what is the purpose. Because if it is to leave something behind in the event that something happens to you, this is the point where I would say maybe you should approach an insurance company and see what it is you can do to put the right things in place in the event of an untimely death of the breadwinner in the family. But if it is you're looking towards saving towards the education of the 3-year-old, or to leave a legacy for the 3-year-old at the age of 20 or something to give them a startup when they're an adult, then it is yes, you can use an investment product. However, you absolutely cannot put a 3-year-old as an account holder on a mutual fund or a beneficiary. So if it is you're opening the product for that specific purpose, we will have to advise you that you put that specific purpose on your own will and testament. Okay. Oh, I think I have answered all of the. When was the DIC limit increased to 225,000? The DIC limit stands at $75,000. It is not 225,000. However, there are 3 classifications in which you can get $75,000. You get $75,000 for all accounts in your name only. You're entitled to $75,000 for all your joint accounts. And there's a $75 limit as well for accounts, irrevocable trust accounts. We will actually be discussing that in greater detail in our second webinar, which is on August 10th, 2011, Understanding and Managing Risk. Would you advise taking a loan for a wedding? Well, that really depends on the circumstances of the couple. Because normally I tell people when making credit decisions, I need to look at your own personal balance sheet. I need to see whether taking a loan or not will take you into a negative net worth, or if it will be putting you in a very low positive net worth. Because when you're taking a loan for a wedding, you are increasing your liabilities, but your assets will not necessarily be increasing. I mean, yes, you have the wonderful day, the memories, the smiles, the great honeymoon, and so on. But you need to ask yourself, do you want to push yourself into that debt for this? And it all depends on your own personal situation. So at that point, I would have to meet with the couple, look at it, what it is they currently have in place, what assets they've accumulated, and see if it is we can somehow put a savings plan and a small loan in order to avoid this, or maybe look at a savings plan and maybe a credit card to facilitate with some of the expenses rather than taking a loan for 100% of the cost of the wedding and so on. So it really depends on your own situation, because for some couples I would probably outright say no. I think that they'd be putting themselves into severe debt and they may not be able to live comfortably after, because a lot of people don't understand that, yes, a wedding is all great and nice, but the marriage that comes after means that greater responsibilities. You may now be living on your own as opposed to with parents, so now you have your own expenses and so on. So you need to look at all of these before making a decision as to whether or not you can actually meet your payments on a loan. So you can actually email us at investments@firstcitizenstt.com, where one of our professional marketing officers will be able to make an appointment with you and discuss this in greater detail. Is there any fund that can be used as both a savings, investment and savings account? Well, that's why I discussed the Abercrombie Mutual Fund, because it is ideal for both actually, but it's ideal for short-term investment goals. Again, short-term investment goals. The Abercrombie Fund will not be the first fund that I would recommend for your medium to long-term goals, because the rate of return, as we see, is 2.15. Yes, it sounds fantastic as opposed to the regular deposit accounts, but when you compare it to the returns that you can make in the investment arena, where there are income and growth funds and bond funds and so on, it will not be necessary. It will not be most appropriate for your medium to long-term goals. What are the length periods do you all offer for fixed deposits? We have 1 month, 3 months, 6 months, 1 year, 2 year. We have 18 months as well as 3-year fixed deposits. Do you provide any investment options accounts that can be controlled overseas, deposits, withdrawals, etc.? We do have clients who hold investment accounts with us that reside abroad. The first thing that we advise them of is, depending on the country in which they reside, there would be a withholding tax placed on the account. And yes, we do facilitate deposits to the account via wire transfers through their banks abroad. We simply give them the First Citizens information as well as their account information that can facilitate deposits. However, for withdrawals to be made, they would have to send instructions through secure messaging, and the withdrawals would only be able to, if it's a transfer to another account and so on, and they send these instructions. So it's really very tedious, but we do accommodate it. Would you advise taking a loan for vacation travel? Again, this is very similar to the question that was posed with the wedding. It depends on the person's personal finances, because again, I said if you take a loan, especially for a vacation, you on your balance sheet, you have an increase in your liabilities, and on your asset side, what do you put? You have the smiles from the vacation, the experience, the memories, but there's no dollar value attached to it. So you've just decreased your net worth. So it really depends on your own personal situation. What medium to long-term investment products do you offer? Medium to long-term products that we offer at First Citizens Asset Management is the Immortal Income and Growth Fund, as well as the Elder Cooch Fixed Income Fund. At this time, I would like to say that I have gone well over my 30-minute period, and I'm happy that you all have so many questions, but what I would advise is that you can contact my entire department, investments at firstcitizenstt.com. We respond to you within one working day. So please, any questions, comments, anything you would like to see featured on later webinar series, send us an email, investments@firstcitizenstt.com. Again, I am Nadira C. Prasad from First Citizens Asset Management Limited, and I thank you for staying with us, and I look forward to seeing you again, well, being with you again in 2 weeks on August 10th, 2011 at 1 p.m. when we do Step 2 to your financial freedom, understanding and managing risk. Thank you.